Hello, this is the Trade Detective, Steve Warshaw from RecordPriceBreakout.com, and today I wanted to show you a stock that has some very interesting technicals going on here that I have traded in the past and has some huge potential for profit. So the name of the stock is DRYS Shippers, DRYS. It's in an industry that obviously over the past 3.5 years has gotten beat up pretty bad. But what I'm seeing here is a nice positive trend, and I wanted to show you what's going on here. So the first thing is what you can see here is if you look at price generally from October to February, even to back here in August, you can see things are pretty flat. Let me change this to a line chart, and you can kind of see, you know, it's been in a little bit of a descending triangle, but has been fairly steady. And the important thing about this is during this time, if you look at things such as the MACD and on balance volume, you can see that there's a divergence happening there. Now that in and of itself is probably not enough to make it worth trading this stock, but what's happened in the past few days has changed that. And so what I'm looking at now is go back to a candle chart, and let's zoom in a little bit. What you can see here is that there's been a massive spike in volume, and the stock has been moving up. And in fact, it's broken outside of the Donchian channel, which might mean that it is due for a bit of a pullback here. But what I'm expecting to happen here is it's going to ride along the bottom of the 200-day moving average. And if it manages to continue to show these nice divergences, these strong volume spikes, and push through to the 200-day moving average, this stock has a long way to go. And let me just show you how far it has to go. If you back out to the 2-year chart, I guess maybe we'll go further now. Let's go back to 2008. This was a $130 stock. It's now down to $3. So you can see obviously moved out like this. Let's move it out to a weekly chart. It doesn't really help very much, but you can see, I mean, the chart, it really hasn't done much. It's been a nice steadily down trend, and it hasn't come anywhere near to breaking out of anything along these lines. I mean, you can see it's been below the 200-day moving average since the beginning of 2011. So any kind of move here is potentially very positive to go above this 200-day moving average. So, you know, it's a little early. I wouldn't get in yet. I would wait for it to break the 200-day moving average and to see a retest. So, like for instance, if you look in this area here, you can see it broke back above the 200-day moving average, and it didn't hold. So let's look for something that's a little more definitive. And the only difference being is this major divergence that we're seeing here leading up to this breakout. This is a very positive signal for this particular stock. So that's it. I'm watching it, and if we see that retest, I think this is a stock that has a very long way to go. You know, certainly without breaking much of a sweat, you know, a 50% or 50% retracement level could be definitely within the cards. You know, up into the $4.15 range. Right now it's at $3.05, so that's a pretty significant move. So I just wanted to throw that out there, and I hope that you guys find this useful. Keep an eye on DRYS Shippers. Take care.